Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. After months, maybe even years of anticipation, the U.S. presidential election is just 8 days away. In typical years, election night would bring investors greater clarity on policy direction for the next 4 years. But of course, 2020 diverges from the norm. Joining me to discuss is Dave Mazza, managing director and head of product at Direxion. Dave, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
And the question is, how have investors been positioning leading up into the election? Are you seeing any things in terms of flow at Direxion that gives some insight?
Yeah, we are. I think as folks know, Direxion is one of the leaders in leveraged and inverse ETFs. And these are really tools that are used by tactical traders to try to take advantage of short-term moves in the market. So they amplify exposures on a daily basis. And what we're seeing is a significant increase of interest in our 3X bear fund on the S&P 500. The ticker there is SPXS. So investors or traders as well are using this to try to take the inverse exposure to position for greater volatility. As we know, when markets get more volatile, they tend to sell off, just like we're seeing today. And what's unique again about this election is that we may not end up on election night with either certainty of which candidate wins, and then what actually that means for the policies that could be put in place by either administration.
So Dave, is there any difference with the way long-term investors are faring? What looks attractive from a diversification perspective? Because certainly with this election, there's something there for the short and long-term, short and long investor.
Yeah, that's right. I think we're really actually seeing kind of a bifurcation there, just like maybe seeing a bifurcation in the economy between haves and have-nots, is that we're seeing, short-term traders take advantage, use inverse ETFs, use the options market, use other types of exposures to position on again, a very tactical basis. Long-term investors, though, are actually looking at our ETF, the Direxion Flight to Safety Strategy ETF. And what's in that fund is actually long-term exposure, or intended to be long-term exposure, to 3 assets that historically have done extremely well during periods of volatility. That includes physical gold, utility stocks, and long-term treasuries. So just 3 assets in there, but it's intended to be a diversifier to traditional equities, to fixed income, because these assets actually have diversification power amongst themselves.
I love the ticker for this one, FlyT. That's a good one to have. But Direxion's known for their levered ETFs. Is this kind of ETF levered as well?
No, it's not. This really ETF is intended for investors to have a long-term position. So yes, most of our ETFs are really developed for tactical traders to use, either 2X or 3X exposures, again, on a short-term basis. This ETF, along with a few others that we've introduced this year, are really intended for long-term buy and hold. So this ETF will tilt and move the positions between the gold, the utility stocks, and long-term treasuries based on their trailing volatility, but only very modestly through time. So this is intended to be a diversifier relative to traditional assets for long-term investors.
All right, Dave, great to catch up with you as always. Thanks for joining us on Trade Talks.
Thank you.
Thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.